Time to look at the unemployment rate in Canada under the third part here, specific data to look for when analyzing major economies. Our project here is designed to help you understand fundamental analysis sides of the trading world, looking at what to take into consideration when trading the currency markets. If you are trading the currency pair, or if you are trading a currency related asset, or if you are trading anything, you must have, first of all, on the first hand, you must have a technical analysis plan or setup, and then you should have a fundamental analysis part to take into consideration. Now, how to take into consideration fundamental analysis side? Well, first of all, you should go to the economic calendar, take a look at the releases that are going to come to the market at the moment you are trading, and try to interpret those releases. Now, in order to help traders here on binaryoptions.net.au, we are making a synopsis of the most important economic indicators to be watched for the major economies in the world: US, Eurozone, UK, Australia, and Canada. And by combining the currencies of these 5 economies, basically you have almost all the available currency pairs and crosses one broker or any broker in this world is offering. Now it is time for the unemployment rate to be looked in Australia, and like in the United States and in Europe, and actually in any economy in the world, the unemployment rate is a leading indicator of economic health. The lower, the better, and if compared with the US, Eurozone, UK, and Australian economies, the unemployment level in Canada is better than the ones in US, UK, and Eurozone, but higher than the one in Australia. You will see that when we are looking at the past 6-month data, worth of data regarding the unemployment in Canada. So once again, the unemployment level in Canada is better than the ones in US, UK, and Eurozone, but higher than the one in Canada. Now, what does this tell us? It tells us that the commodity-driven economies fared like Canadian economy and the Australian economy. They fared better during this financial crisis period that started with the troubles in the 2008 on the housing sector in the United States. And during those times, US, UK, and Europe, actually the whole Eurozone, suffered, while the Canadian and the Australian economy fared better. Now it is going to be interesting to see for the very next period if something is changing in the sense that are the US, UK, and European economies going to recover on the detriment of the Australian or Canadian ones, or the difference in between them will stay the same. This would be definitely be seen in the flows that are influencing the currencies of those major economies. The unemployment rate shows the percentage of total workforce that is unemployed, and actively seeking employment during the previous month. Of course, this one is released again by Statistics Canada. The most important things to take into consideration when looking at the unemployment rate indicator in Canada are the release date and the release time. It is coming monthly about 8 days after the month ends, and the release time is 12:30 GMT during the North American trading session. If the actual comes in higher than the forecast, this should be viewed negative for the currency. Why? Nobody wants unemployment rate to have higher levels, of course. So higher actual than the forecast, you have negative than expected, negative for currency, sorry. And if the actual comes lower than the forecast, then this should be interpreted as positive for the currency, because that would mean the economy is faring well, and jobs data are directly linked with consumer spending data. Again, markets react strongly to such a release. It is the first year data, and the unemployment rate and the employment change in Canada are released together, usually together with the NFP and the unemployment rate in the United States, on the first Friday on each month, but not it is not mandatory for them to come together, only usually, let's say. Sometimes, like it was the case in this month in August, they were released on a different date. The release date is monthly, about 8 days after month ends, and the release time is 12:30 GMT. Now looking at the past 6 months worth of data, starting with February 2013 and until July 2013, what you are seeing here, you are seeing the unemployment rate in Canada around 7%, actually traveling between 7 and 7.5%, which is quite a good unemployment rate considering the levels we are having all over the world. 7.6 in the United States, so somehow similar but better in Canada. In the United States, the quantitative easing program is pegged to the 6.5 unemployment rate to come, 12 point something unemployment rate in Europe, so way better unemployment levels in Canada, but 5 point something in Australia. So if you are comparing the Canadian with the Australian economy in terms of the unemployment rate and the employment change, well, the unemployment rate is definitely in the favor of the Australian economy and not the Canadian one. Nevertheless, both commodity-driven economies are faring, or at least they did well compared with UK, US and Eurozone during the financial crisis. We'll move to the labor productivity, and this is the second tier data out of Canada, but it's important because it will show you the change in the productivity workers have when they are producing things. So we'll keep that in mind for the next indicator, but until that, let's stick with what's important for the unemployment rate. The release date is monthly, about 8 days after month ends. Release time is 12:30 GMT, usually released together with the NFP and the unemployment rate in the United States. It is a first tier data, and markets react strongly to such a release. Stay tuned please now for our next indicator, and the indicator is being represented by labor productivity out of Canada.